The market is not as complicated as you think if I put it in historical perspective. In 2015, the median home price was $476,000 in California. In 2017, it was $537,000. In 2019, it was $592,000. Then in 2022, everything went berserk and it jumped to $831,000 in California. For 2023, we predict about $758,000 median price. That is $73,000 less than last year. And you've already seen the prices start to adjust. If you bought in 2015, you still made a profit on average of $283,000 in profit. So tell me again why people think about why they should buy a home. Now let's talk about interest rates. In 1980, the average interest rate was 15.38. In 1990, the average interest rate was 9.2. In the 2000s, it was 6.5. I'm sorry, 6.7. Currently, it's about 6.5. So I know what you're asking. What happened to the 2, 3, and 4%? Those were temporary. Those were to get us out of the recession that was caused in 08, 09. They were never intended to be long-term. And yes, we were in a recession starting in 2020. Our growth per capita was negative 7%. That is a recession. Whether it was COVID related, whatever you want to say, we were in a recession. Good news is we are coming out of it. At its peak, the inflation was at 8.9. Right now it's in the mid fives. Things are getting better. So what do we expect in 2023? Well, homes have pretty much stabilized, guys. If you're asking me how much lower they're going to go, they're pretty much there. Rates have stabilized. This is the new normal. Inflation is currently at 5.6 and is expected to go down to 2.8 by the end of the year. So what happens to real estate when we come out of a recession? It goes up. What happens to real estate when we're in an inflation? It goes up because people take their money out of the stock market, which is taking a beating, and they put it in real estate. Any volatility we have in real estate that happened fourth quarter or the first few months of this year is already starting to wane. It's going to be completely gone by this summer. So if you are looking to buy and you are renting and you're asking yourself when's a good time to buy, you're ready to buy when you're ready to buy. Don't time the market or the market times you out. Remember, real estate is still the best way to build wealth. It forces you to put money in a savings account via equity. You will be 42 times wealthier if you own a home than if you rent. And that's because of the force of the equity that comes with the home. So if you're trying to time the market, don't. 10 years from now, you're going to be kicking yourself. We suffer from a lack of inventory. The new reality of California is they don't build enough homes. So what does that mean? They're not going to crash anymore. It's still the best way to create wealth as opposed to throwing your money away. So yes, we have reached the bottom. And I'll leave you with this. 82% of investors right now are buying long-term rental investments, not flips. Why is that? Ask yourself. Because they understand that due to the lack of inventory, due to the fact that California makes it so difficult to build, that's where the market is going. Landlords are the future of California, not tenants. So ask yourself, why am I not buying? And if that's you, because you're trying to time the market, there's nothing to time. You buy when you're ready. I hope this makes sense, guys.